In this video, we'll talk about the latest update for Dogecoin, what it is, how the developers are planning to implement it, and how it'll affect Dogecoin. So it had been more than half a year since the current version of Dogecoin Core, one of the primary wallets and methods for handling Doge, was released when the project creators announced the release schedule for the next version. The proposal, which was revealed in a separate GitHub section dedicated to Dogecoin. When analyzing the latest version's release plan's high-priority items, special emphasis is focused on those relating to the eradication of known vulnerabilities. This technique, according to the author, will help limit the risk of attacks that might block the nodes from receiving transactions from other nodes while also improving the overall security of the Dogecoin core infrastructure. Other significant improvements prioritized in the proposal are all focused on user safety and making Dogecoin Core more ready to go, either introducing an RPC function that will reveal wallet transactions out of mempool helps, or raising the wallet's discard threshold to 0.01 Doge. When discussing what should and may be included in the future version of Dogecoin Core, the developers emphasize the need to clean up the wallet code, tighten up the overall user experience, and update those portions of the wallet architecture that influence the codependence of all framework components. And all of this is going to greatly affect Dogecoin's price over the next couple of months. Now let's talk about some bad news for Bitcoin, since the correlation between Doge and Bitcoin is so high right now. So a prominent market analyst at Bloomberg Intelligence has warned that Bitcoin is at an inflection point, which means the crypto is on a curve that might climb or collapse. So, the rising interest rates surely contribute to some of the uncertainty that is causing investors to avoid riskier assets such as cryptocurrency. He also said, rising interest rates have had a significant impact on technology stocks and cryptos. And according to Yash Patel, a general partner at Telstra Ventures, larger institutional players have increased their trading activity in cryptocurrencies in recent years. Borrowing money to carry out these activities becomes less advantageous as interest rates climb. Currently, it is linked to the markets, which many believe will be detrimental to investors in the short run. According to Joseph Edwards, the head of financial strategy at investment management firm Solrise Finance, he has extremely low expectations for Bitcoin and cryptocurrencies in general. There isn't much new investment moving into the markets, he added, which is usually a precondition for market development. And then there's another analyst who speculated that the Bitcoin price may hover near the price support zone before plunging, implying that the negative trend may continue. Meanwhile, blockchain and crypto industry experts said that the recent collapse in the digital coin market might aid in the eradication of bad actors from the system. And then there was the Web3 Foundation CEO Bertrand Perez who said, "We are in a bear market. I think that's a good thing because it will remove the individuals who were there for the wrong reasons." Also, according to a 21 shares analysis, Bitcoin and the S&P 500 are in lockstep, with their correlation reaching an all-time high of 0.69. This created doubt about the use of crypto assets in portfolio diversification. According to 21 shares, this is a one-time occurrence. The business indicated in its 6th issue on the state of crypto that the two asset classes follow separate paths in the long run. Furthermore, at 0.07, the analysis found practically little link between Bitcoin and gold. According to 21 shares, the two assets provide unique diversification resources for clients' portfolios. In terms of returns, many cryptocurrency investors are concerned with the timing of their investments, looking for the best time to invest. Events like the Terra ecosystem's demise, Fed interest rate rises, and the recent Solana blockchain suspension, among others, have had an influence on cryptocurrency investments. Many of them withdrew cash from crypto investment products only last month, resulting in a 10-month low in assets under management. In contrast, the survey indicated that, in most cases, timing is not a crucial consideration when making crypto investments. Also, McGlone, senior commodity strategist at Bloomberg, examined the present market and predicted that Bitcoin will beat all other assets and reach 100K by 2025. The great reversal, according to McGlone, is just getting started. The current market exhibits the most severe inflation in 40 years, as well as the first in the majority of people's lives. He did, however, claim that once this moment is through, Bitcoin would surge and become the finest asset to own in the world. McGlone stated that Bitcoin and the S&P 500 had just returned to their 100-week mean at the end of May for the first time in 2 years. As Bitcoin breached its 30K support, Nasdaq broke one of its significant supports. McGlone suggested that because they're all tied, the question is who will emerge first and when. He said, "For the time being, I expect Bitcoin to trade lower. I'm not sure by how much. IT may drop to 20K, but I doubt IT will. But no matter what, I fully expect IT to reach 100K in 2 years." McGlone cited the adoption rate of all crypto assets, particularly Bitcoin, to illustrate his conclusion. He gave the following data to emphasize the importance of adoption. Crypto is about 1% of the total market capital of all equities on the planet. They were 0.01% a few years ago. They were even less a few years before that. He referred to Bitcoin as digital gold in a world that is rapidly becoming digital. Furthermore, as its popularity grows, so does its supply owing to its coding. As a result, McGlone predicts that Bitcoin values will surge in the next years. He also briefly discussed Ethereum as a platform that is revolutionizing the fintech industry and has a high acceptance rate. He suggested that when the bad market ends and the appropriate supports are discovered, Bitcoin and Ethereum would outperform all other assets since their desire for adoption is far larger. He said, "I think what will happen initially is that we will get through this flush period. Then I fully expect Bitcoin to return to its outperforming trajectory." McGlone also examined the current shift in Bitcoin attitude. He was questioned why Bitcoin has become a risky asset after serving as a safe inflation hedge for so long. McGlone responded to the query by noting that the volatility is just the maturing of a new technology and asset. He mentioned the following: 260 days volatility in Bitcoin is almost the same as Tesla's, Amazon's in 2009, and gold's in 1980. He closed his remarks by stating that after Bitcoin's transition stage is through, it will become a risk-free asset that can be utilized securely as an inflation hedge. Another thing that decreased people's trust in the crypto market was the rising number of scams. According to the Federal Trade Commission, over 46K people have lost over $1 billion in crypto-related frauds since the beginning of the year. According to a study issued Friday, around $680 million in fraud was detected in 2021, with $329 million recorded just in the first quarter of 2022. But then the good part was that following the end of March, Bitcoin has begun what would eventually become its longest weekly candle pullback. Bitcoin tied the previous record of 6 straight red candles at the beginning of May before breaking it and registering its 9th last week. During this period, the asset lost almost 20K in value and dropped to a year-and-a-half low. It finished last week at 29.2K, after which it rebounded and surged to above 32K a few days ago. However, it failed there and is currently worth less than 30K. Nonetheless, it is still several $100 over 29.2K, indicating that the downward trend is about to end. With a price nearing 30K, Bitcoin's market cap remains above $560 billion, and its dominance over alts exceeds 46%. Also, short-term Bitcoin investors appear to have capitulated, according to Yassine El-Mandra, an analyst at ARK Invest. The MVRV ratio, which gauges Bitcoin's market value in relation to its realized value, has dropped 35% below the break-even price. According to El-Mandra, such levels have been seen between January 2020 and July 2021. When investing, the popular on-chain indicator is frequently used to gauge investors' attitude. Long-term holders, however, continue to have diamond hands. At the same time, more than 66% of all Bitcoin in circulation has not moved in almost a year, setting a new record. According to the expert, the network's essential fundamentals, such as utilization and security, are also in good shape. Also, as the crisis in Ukraine grows amid the Russian invasion, many fraudulent schemes and charities have been using the situation as a money-minting opportunity. They said, "Criminal actors are taking advantage of the crisis in Ukraine by posing as Ukrainian entities needing humanitarian aid or developing fundraising efforts, including monetary and crypto donations." The FBI suggested the fraudsters are impersonating Ukrainian charities and are collecting monetary donations in the form of Bitcoin and other cryptos. Also, Australian bank execs say that customers don't understand basic financial well-being. Crypto services, not in the foreseeable future and not for retail, says one officer. However, another says that they are still intent on launching crypto services despite challenges. Two executives of Australia's Big Four banks have ruled out permitting retail customers to trade crypto on their platforms because, according to them, most customers have no financial literacy. Also, through its national media, the Chinese government announced to the public the possibility of tighter regulations against the crypto sector. This, the media explained, was caused by the recent Luna crash, which was very traumatic to its millions of token holders. Coming back to Dogecoin, it can now be accepted at 29 shopping malls, 13 hotels, and 4 mixed-use communities in the UAE. So, a retail conglomerate Majid Al Futtaim signed a partnership with Binance to make it happen, and it's going to be great for Dogecoin. Currently, Doge is trading at around 8.2 cents, and it traded sideways pretty much all day. We saw a slight spike 6 hours ago, but it lasted for only half an hour or so. Still, I'm not too worried because of the latest update for Dogecoin that came out today. I think it has the potential to take Dogecoin to new heights.